Atlanta home prices have fallen by $31,000 since their peak in April 2022, and now inventory has surged to 4.6 months, an ominous signal not seen in years. Buckhead's values alone have dropped nearly 10%. But what could cause a once booming city to unravel so fast? The real mystery behind the Atlanta real estate market crash is just beginning to surface. From the spring of 2022, Atlanta's housing market traced a clear arc. Median sale prices across the metro area crested at $471,000 in April 2022. According to Georgia MLS, by September 2025, that figure had slipped to $440,000, a 6.6% drop over 29 months. The average sales price in June 2025 stood at $556,500, showing a 1.2% year-over-year decline. But price is only half the story. Inventory, once scarce, has multiplied. In June 2025, active listings reached 20,582, up nearly 37% from the previous year. The month's supply metric, the time it would take to sell all current listings at the recent sales pace, jumped from 2.2 months in June 2024 to 4.6 months a year later. This level of inventory hasn't been seen in years and signals a distinct change in market leverage. Sellers now face more competition, and buyers have options they lacked during the pandemic frenzy. The numbers set the stage for deeper questions about what's driving this rapid softening. A closer look at the map reveals sharp differences across Atlanta's neighborhoods. In Buckhead, the median sale price dropped from $709,000 in March 2022 to $641,000 by September 2025, a 9.6% decline. East Atlanta, by contrast, saw its median slip just 1.8% over the same period, from $489,000 to $480,000. West Side registered a 3% slide, with the median falling from $372,000 to $361,000. These numbers come directly from Georgia MLS records, dated October 2025. Buckhead's steeper drop stands out, especially as inventory there climbed 36.8% in 15 months, compared to a 9.8% rise in East Atlanta and only 3.4% in West Side. The data suggests that price pressure is not evenly distributed. Some areas, like East Atlanta, are weathering the downturn with smaller losses, while others, notably Buckhead, are feeling the full weight of the correction. The reasons behind these uneven shifts remain an open question, hinting at deeper forces at play within the city's real estate market. Mortgage rates in Atlanta began a steep climb in early 2022, rising from historic lows of around 3.2% to a peak of 7.08% on March 21, 2025, according to Freddie Mac. This spike in the cost of borrowing sent a shockwave through the city's lending and legal systems. Statistical analysis from the St. Louis Fed and Georgia MLS reveals a strong negative correlation. For every rate increase, home prices tended to fall 2 months later, with a cross-correlation coefficient of minus 0.62. The effects rippled through court filings as well. In the first quarter of 2025, Fulton County recorded 918 foreclosure and REO actions, a 74% jump from the same period a year earlier, based on county clerk records. Internal memos from the clerk's office in March 2025 flagged a 3-month processing lag, hinting that the distress pipeline could be even larger than the public numbers suggest. Lenders, already cautious, began tightening credit, while the courts faced a mounting backlog. These legal and financial stress signals intensified well before the most dramatic price cuts appeared in listings, underscoring how the market's foundation was already under strain long before the headlines caught up. Permits for new construction in Atlanta have slowed, even as the skyline fills with cranes and unfinished frames. Between October 2023 and September 2024, the city issued 2,506 single-family permits, down from the previous year's tally. Multifamily permits totaled 2,400 for the 12 months ending September 2025, but 570 of those units remain stalled, caught in a web of labor shortages, rising material costs, and city review delays. Builders and city planners are locked in a quiet standoff, each blaming the other for the bottlenecks. The result is a growing backlog of approved projects that have yet to break ground. Meanwhile, vacancy in Atlanta's apartment sector has climbed to 10% in the third quarter of 2025, according to market surveys. That's the highest level in a decade, fueled by a wave of new supply that outpaced demand. This shadow inventory, permitted but unbuilt, finished but empty, adds another layer of pressure to a market already wrestling with rising listings and slower sales. The city's supply chain is straining at both ends, amplifying the risk of a deeper correction if demand continues to soften. On July 12th, 2025, Atlanta's housing inventory recorded a 22% surge in a single week, an anomaly flagged by Georgia MLS with a Z-score of 2.4 compared to the rolling average. Brokerage data traced a cluster of new listings to corporate actors, with institutional sellers releasing dozens of homes across the metro. Open Doors activity drew attention, but the spike spanned multiple portfolios, not a single bulk dump. The sudden glut overwhelmed the usual pace of absorption, pushing weeks of supply to levels unseen since the last downturn. For market analysts, the numbers defied expectations. A spike of this scale, in so tight a window, is statistically rare, and the trigger remains a point of contention among Atlanta's real estate detectives. Latasha, a homeowner in Peachtree Hills, slashed her asking price in June 2022 after weeks without a single offer. Jordan, a small landlord in South DeKalb, stopped buying new properties the day mortgage rates hit 7% in March 2025. By August, Brianna faced her first vacant duplex in Fulton County, unable to find a qualified tenant even after a dozen showings. On July 12th, 2025, Atlanta's housing market recorded a 22% spike in active listings, the largest weekly surge in recent memory, as documented by Georgia MLS records. Since the market's peak median price of $471,000 in April 2022, prices have declined to $440,000, with neighborhoods like Buckhead seeing a 9.6% drop. Rising mortgage rates, which reached 7.08% in March 2025, and a growing backlog of foreclosures, 918 filings in Fulton County in the first quarter of 2025, have directly contributed to this shift. Yet, not every data point can be traced. For example, the full details behind institutional sell-offs and specific personal stories remain partially unverified. What is clear is that elevated vacancy rates and delayed construction continue to put pressure on Atlanta's housing landscape. The evidence shows a market in transition, shaped by economic forces and individual lives. As of October 2025, Atlanta's real estate story remains unfinished, but the facts reveal both the depth of the downturn and the questions that still persist.